Hi, everyone. So today I'm going to bring to you a quick update on Volatility 50. Okay, I haven't really done any update on Volatility 50, but today I'm going to try my best to give you a breakdown of what is happening on Volatility 50. All right. So without much ado, let's go to the video. And first of all, if you are new to this channel, I'd encourage that you subscribe. Solely what we do on this channel is detailed analysis of synthetic volatility pairs. Okay, so all the volatility pairs, all right, that is traded on deriv. We do a thorough analysis here with smart money concept taught by my mentor Michael. So let's go detail into today's episode. All right, so we are on volatility 50. This is a monthly time frame. Actually, when you go down to the weekly time frame and the other time frame, you don't seem to really have a clear depiction of what the market is trying to do and all that. So I've tried to put together a few understandings. So let's start from our monthly time frame. Yeah. Okay, so on the monthly time frame, what you can see is that we had the market moving from this high to this low, then it came up to this high again, and then traded to form this low which couldn't break the previous low, came up, couldn't take the previous high, and then we saw a breakdown taking the recent low. Okay, and then it took down the previous low as well. Now it clearly gave me the picture, that the depiction that price was actually um, in a bearish market. Okay, so from this high all the way down to this low to this high, now we have a lower high, and then to this low now we have a lower low, to this high, ignoring these short-term lows and high, the short-term high and short-term low, because it didn't take this high in here and it didn't take, neither did it take the low in here, so they are short-term highs and lows. And then price breaks down to this point. Okay, price breaks down to this point, and then what comes into play now is that, so from this swing high, this was the swing low, or the leg that swings lower, so the short term doesn't come into play. So we have from this point to this point, so from this point to this point to this point, and then down all the way to this area. We don't regard this short term lows, but then we have to delineate it, or we have to mark them out, because in so far as this short term is a short term low, usually what we expect the market to do is for the market to raid the short term low, the short term high, sorry. Watch this is a short term low, it was raided, and then we broke below the body of this particular low in here, which gave us a clear picture that we had shifted structure and we're still in the bearish market. So we pushed up here, price traded back into this area, and you could see all this form of consolidation happening in here. Now one clear picture that your eye should be drawn towards is this high in here, that market would obviously go and then take down this high. If it goes to take down this high and it doesn't take this high in here, we know that we are still in a bearish trend. So you begin to set your sell entries inside this area, you look for setup inside this area, and then in as much as we have this swing, so let me show you, in as much as we have this swing all the way down to this low, this is our equilibrium. Okay, so it means that all prices above the equilibrium are all premium prices, and then we have the discount prices here. Okay, so for markets to continue the bearish movement, it has to go and seek for premium prices above the equilibrium. So if price target is high, we find setup inside this area to rally down. Okay, now let's take this off and then continue with the picture we are trying to paint here. All right, so currently we saw price traded all the way up, closed in on this fair value gap into this area, regarded this as the other block, and then price dipped further down into this area. Now the question is, what is happening? What happened inside this area? So we are regarding this as our low. Okay, broke below this one, so we regarded this as our swing low from this swing high. This is the swing low. Okay, now inside this area we had to rally up this way before we drip down. Now we noticed that price went this way and then came down to this area and got bounced off, and it began consolidating. So the question we ask is, what exactly is happening inside this area? What did happen inside this area that got price bounced off? So now we are on a monthly time frame and we don't get a clear picture. If you look at let me zoom out. If you look at the picture that is painted here, if you put your line on this area, you find out that the bodies of the candle didn't traded below the mean threshold of this particular bearish candle here. So if we are saying this is an order block, it means that price traded below the mean threshold of it, which doesn't give me a clear picture of this being regarded as the order block. So rather, what I'll do is I'll have to go down to my smaller time frame to see if there was a more clear order block on the smaller time frame that price actually reacted to. Okay, now you could see where the wicks of the candle also traded all the way into. So I try to mark them out. All right, so I'll show you as we go ahead. Now let's go. Now I have tried to mark the highs and the lows with so this is a high and then the low. Okay, I've marked them with the red lines so that we have a clear depiction of where our highs and then our lows are. All right, so let's go to our weekly time frame. So now we are on our weekly time frame, and beautifully this is where we saw price dropped on the monthly time frame, and I was like, it wasn't in the mean threshold of the other block, so I was doubting it. Now when you look at it on this picture, you can see clearly that this particular weekly bearish candle in here was the other block. Okay, this is the other block in here. So price traded, look at the bodies of the candle actually respected. It didn't go into the other block. All right, look at, it was just the wick that actually delved a little into the other block, and then as we always say, the wicks are always doing the damage, but the bodies are telling the narrative. Okay, now price delve a little into this, and then it got bounced off, and then it goes higher into this area, and then we see price drop consolidating in here again. Now another important thing I want you to know, I'll come and show you something inside this, that in as much as we even have some form of consolidation in here, or when you look at it on the monthly time frame, you could see that there was a lot of consolidation in here, yet still on the smaller time frame you may be able to decipher and tell if there are trends in there. For instance, a typical example is here, the short-term high that was formed in here. You notice that the market started from this high, from this low, and then this high, and then it broke down further. So now we have a high, a lower high, we have a low, and then we have another low in here, so forming a lower low. Okay, so it tells you that yes, you've started some bearish movement in here. Okay, now we got bounced off this, and then price rallies above this area. Okay, now watch this. Insofar as price has rallied above this high in here, it doesn't say anything, but the high that's, for instance, like this one that we regarded as our low, okay, as our swing low with the red line, watch this, it took down this high in here. Okay, so we had some form of swing from this high all the way to this low. We have some form of swing high in here, and then let's look at it clearly so that we are more defined. We define it well, although it's some form of consolidation though, but it is still regarded as such. Okay, so we have this high in here, then price trades down, price trades down, comes back in here, and then so we have some form of high, some form of low in here, a high, a low, a high, and then it breaks down. Now price comes to take down these highs in here, forms this high, and then it breaks down into, let's say for instance, price has shifted structure in here. Okay, it shifted structure in here. Now price trades back to form an ultimate trade entry into the ultimate trade entry, which is into the other block, and then we saw the rally up. So insofar as price has rallied above this high, we have a shift in structure again with the bodies of the candle closing above this. We have a shift in structure. Then the normal thing or the norm is that price should trade back into this area, but doesn't close below this. Okay, doesn't close below this area, rather seek for higher prices above this high. Now what happened rather is afterwards we saw more consolidation happening in here before price ultimately dropped into this area. Okay, before it's, we could see that it was trying to rally up. Now what happened that price got to this area and then it got bounced off? We could see that the bodies of this candle is showing us that we are not in the mean threshold of this particular bearish order block. So rather let's look at on the smaller time frame and see if we have a clear depiction of a daily. We are on a weekly, if we can have a clear depiction on the daily time frame to see if we have price trading into a mean threshold on the daily. Okay, so we have this price action highlighted here. I wanted to see what exactly happened here on the daily, so let's go down to our daily. So beautifully on the daily time frame, so this is what happened here. It was just some form of rejection with the wick of the candle trading into the other block on the weekly order block. Okay, and in the weekly order block, if you redefine it to the daily, you have some different story altogether in here. Okay, now watch this. So you have this trading into this area and then goes bounced off. Now watch this. So we have this, which has traded, this daily candle has traded into a weekly order block, right? Now let's see when price traded into that area, what happened. Okay, so let's clearly see. Now price trades exactly with the bodies of it into. Now watch this. So this is the bodies of the candle. What does it trade into? Sorry, the first blue line, that is into the mean threshold of the daily order block here, and beautifully, yes, it respected the mean threshold. On the weekly you saw that it wasn't on the mean threshold, but on the daily it's in the mean threshold, and then beautifully price gets bounced off from this point all the way up. And then when price got bounced off, watch this. When price got bounced off, it traded all the way into this area, and you can see some form of, so as I told you earlier, that in as much as we are in a consolidation, you can still find some trends, a little trends in there to give you a little bit of the narrative. So now on the bigger narrative, on the weekly, what we are expecting is for price has already broken this high in here, so we're expecting higher prices above this high. Okay, so whatever is happening down here, we don't expect it to rally or to take this low. Okay, that's how come price traded here and then it go bounced off, and then it gets into this area. Now let's go down to our daily and concentrate more on this area. So on the daily, you can clearly see that when price got bounced off from this area, so let me show you. When price got bounced off from the other block, you could see that before then price moved from this high all the way to this low, from the high in here and the low. So the clear picture is that we were in a bearish market. Okay, now let's look at the buy side of the market on this side. So you saw that price actually rallied, from some form of consolidation, and then it rallied up, closed above this high, with the bodies of the candle to give you a picture that we have obviously shifted structure again on this side. So now this low also becomes a protective low that shouldn't be taken down. Okay, so any price inside this area should also give you the narrative that we are looking for price to take down this high. So now the swing point is from this point all the way to this point. So if we have shifted course to the upside, now necessarily you expect price to do this before it goes up, right? You expect price to come and look for price discount prices before it rallies back to the premium prices. Now price rallies down to discount prices, goes up, back to discount, goes up. Now let me put these lines in here for you to see what I'm trying to depict. So if this is our range, this is a premium side. Okay, so anything below this should rather give us now the entry points for us to seek for higher prices. Okay, anything below this, anything inside this area is giving us. Now beautifully, price just formed some lows in here. So we have this low, we have this low, we have this low, so we have like some relative equal lows happening in here that price would necessarily want to sweep. Not just that, but before, right after that is this fair value gap. Okay, and right after this fair value gap is the other block which has already also traded into another order block. So this is a valid order block. This is a fair value gap resting in here, and then we have some lows, relative equal lows, which you would necessarily expect price to do something about it before we rally to the upside. Okay, so if you are going to frame any buy trade, because already we have a clear picture that we have shifted to the buy side, so we are looking for lower prices so that we can buy at these prices and then offset them when we have higher prices. Okay, so now let's still concentrate on more current price action and see where the direction of the market is seeking to go now. So in as much as we are still expecting lower prices, equal lows happening in here. Now watch this. When price traded into this area and got bounced off, funny enough it traded above this high, but it was a failed swing. It was a failed swing. Okay, so it means that the bodies of the candle couldn't close above the high in here. It was a failed swing. So what happened after the failed swing? Now watch this. You could see that price traded into this area, so we had this movement from this low to this high to this low to this high, this low to this high, and then a low, and then we have this low here, traded down, closed below this low. Okay, came down further and closed below this low, to even give us a clear picture that we had shifted structure back to the downside. Now don't get more confused as we are shifting structure to the up, to the down, to the up, to the down. The picture still remains the same. Okay, but we are getting the narrative on where price is seeking to seek for liquidity on the immediate run. All right, so now price has broken this low with the bodies of the candle, so it means that we have shifted to the sell side. Now therefore what is happening is price rather should be looking at sell side liquidities. Okay, so grabbing the sell side liquidities. So whatever trade we are framing here should be sell trades inside this area to seek for lower prices here before we ultimately rally back. So all this whatever that is happening in here are just temporarily structures. Okay, that's how come if you have a bearish structure in a monthly, if you go down to the weekly, you may find in there some bullish structure and then bearish structure all combined to give you one clear picture. Okay, all right, now let's continue. So when we saw that price had shifted structure to the downside, what did it do? Necessarily we have this type 2 type of market structure shift. So we have this type 2 where market moves, forms a high, a low, and instead of a high high it forms a lower high, and then it breaks down to form a shift in structure. So this is a type 2. Now we had some form of area in here which was more like an order block which has traded into this particular order block. So price gets into it and then it gets bounced off to to seek for lower prices. So now, in as much as the market is concerned, we are looking for lower prices. Where do you think will be the necessarily target? The target will be these lows. So all these lows are called low resistance liquidity. Okay, so it's easy grabbing them than when price is ranging to grab sweep highs and lows. Okay, so these are low resistance liquidity that obviously price will definitely take them down. All right, now let's see here, inside here, to see, okay, what was a more clear, concise picture, and what is the probable action that we have to take. Now you could see that price, after a shifted structure, traded. So for instance, let me go back to the daily and highlight this area for you to see. Okay, so let me highlight this area. Okay, so now let's go to the 4-hour time frame. So this area was our point of rejection, where price had to be rejected. Okay, and then trade off. Yeah, this thing sometimes makes me struggle a lot. Okay, so now you can see clearly that price traded into the main threshold of that particular block, and then it got bounced off. What did it do? It closed in on this small fair value gap in here, and then it got bounced off. Now you could see that yes, there are some fair value gap above here, and then there's some equal highs in here, relative equal highs in here, and the gap in here. That price, you expected price to, but price didn't do that, so you just take it like that. Now beautifully, what do we see here? We could see that there has been a bullish movement in here. This high, and then this low, this high, a low, and a high has formed this bullish movement, and nicely price has just shifted the structure to the downside. So where do you execute your trade? Inside this area where we have this fair value gap before this other block. Okay, so where you seek to execute your trades are inside this area. Okay, so now we have the structure shift already confirmed. Now how do we execute trade inside this area? Let's go down to 1 hour time frame. On the 1 hour time frame, you could see clearly price has formed this relative equal highs in here, a little bit traded, a little bit into the other block on this. So price got bounced off right before this other block, before this fair value gap, sorry, and then it just trading off. So what I would necessarily even expect is price can equally trade into this fair value gap, and then into this particular candle in here, or a little above it, and even trade into this particular other block in here, trade above this high into this other block in here. Then we can expect a rally down. So here, what trade can you set? So all you can set is a sell limit in here. You can set your sell limit in here, okay, into this other block, and then you can just place your stop just above this. Okay, so modify, and then our stop loss should be 192.5196. Okay, so beautifully, that's okay, so this is where we place our stop loss. So it's a very little stop loss. And then where can you take your profit? You can set your profit targets at this low. Okay, so let's modify this. So our profit target is 182.6835. All right, so we modify, and then so for instance, if you are executing such a trade, you know 25:3, how many? You know, you should do the math yourself. Okay, so beautifully, that's the whole premise of what I was trying to point out to you on this market. So ultimately, on the daily, we are seeking to price to rally down here, and all actions here are pointing to you that we are looking at going down, riding the market downwards. Okay, you can still not take your profit here and do whatever you want to, take your profit at whatever level you want to, but I'd rather want you to be more how do I put it, be more realistic with profit setting, okay, rather than just setting profit levels in doing wild guess profit level settings, okay, which is not really helpful. All right, so that's all that I have for you with volatility 50. This was a special request. Okay, so you can still check out the video that I did yesterday on volatility 100, 75, and 25. The market is still in play. All right, so guys, and that's all that I have for you today. If you are new to my channel, please do well and subscribe. And then if you are a returning viewer, thank you for coming. Okay, I believe that if you follow my videos to the end, you would easily get these signals for your trading. Okay, I wish you all the best, and enjoy the rest of the evening. See you.